What's going on, Hustle Nation? It's Johnny here. Today we're going to be talking about high dividend, low volatility ETF. How about that? So lately we've had such a volatile market. Right now it's February 5th. This week, last week, this whole year, these stocks, I mean, we're talking about mega cap, big stocks, right? You saw Facebook, Amazon, PayPal, all those guys up and down like penny stocks. It's crazy. I was like, wow, I've never seen nothing like this before, but you know what? It's all part of the deal, right? We just keep the course. You know, if you haven't seen my video on how to deal with the volatile market, the stock market crash, whatever, I'll leave a link in here or up here somewhere and watch that. Today's video is talking about a good quality ETF that deals with the low volatility, high dividend. And the dividend might not be what you consider high, but we'll take a look at it and you decide. All right. So what we're talking about today is the Invesco S&P 500 high dividend, low volatility ETF. Let's take a look. It is let's see the objective here. Okay. So the objective is to find, is designed to measure the performance of the 50 least volatile, high-yielding constituents of the S&P 500 index in the past year. Okay, take a look at the quarter-end average returns. Okay, so 1 year is 24.83%. The market return is 24.98, so it's pretty close. 3-year, 5-year, pretty close, and the life is pretty close here. Gross expense ratio 0.3%. Got about $4 billion of net assets, which is good. The benchmark index is the S&P 500 low volatility high dividend USD. So let's take a look at the numbers here. Okay, so the numbers. Last 52-week performance, 15.71. We took a look at that. Okay, the key statistics. Okay, so price to earnings, trailing 12 is 17.23. That's pretty good considering the S&P 500 is what, 20 something? Let's look. All right, so compared to the SPY, the trailing 12 is 23, so definitely a lower PE multiple. Price to book 2.29, price to sales 1.44. That looks pretty good. Let's take a look at the composition. So we're looking at energy, looks like. So 3.5% in Williams Company, Chevron, those two energy companies. Tobacco, always been known for the dividends. PPL, also holding company, energy holding company for US and the UK. Iron Mountain is a definitely, if you haven't seen my video on Iron Mountain, I break down all the details in Iron Mountain. I'll put a link somewhere. You see the I or in the link in the description below. Definitely a great growth and dividend stock. Okay, so Kinder Morgan, AT&T, got telecommunications, got drug companies, got more tobacco. So that is in electric utilities. We're looking at a lot of utilities, oil and gas, tobacco. Iron Mountain, like I said, is a good REIT for industrial document storage and data centers. So that's good, good company there. It's the style is a large value. And the high dividend part is here. Distribution yield for the trailing 12 months. 3.42%, which is not too bad. I mean, it's not super high, but definitely not too bad at all. So let's take a look at the key stats here. Price to earnings, price to book, price to sales. We've looked at that. And the expense ratio, okay, 3.45 dividend. Historical growth is pretty good. Cash flow is pretty good. Let's look at the distribution and expenses. Distribution Q1, Q2, dividend income. So their distributions look like they're going, distributions look good. The reason why this looks slow is because it's not the end of the first quarter yet. So, all right, looks pretty good, looks pretty steady. Boom, 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 boom. It's not the end of the first quarter yet, so distributions, that's why it looks a little bit low. That doesn't look too bad. Net expense ratio is good. So let's look at the holdings. So we looked at those just a second ago. Regional exposure, of course, it's North America. We've got the U.S., Switzerland. Market cap, we've got some, it looks like a 50-50 split pretty much. Large cap, mid cap, utilities. Okay, so the exposure we talked about a little bit earlier, the utilities, consumer staples, healthcare, energy, real estate. So let's look at this here. Sector exposure. So industry exposure, electric utilities, like we said, is the highest, and then oil and gas, REITs, there's your Iron Mountain, and then your tobacco, food products. I guess Philip Morris is food products. Let's look here. And not too many short positions here, so it's mostly long on these. So you're looking at a lot of high quality value stocks. So in volatile markets, it's pretty good to diversify your portfolio. Of course, we put a high percentage on the S&P 500. It's been getting smacked down this year a little bit. That's okay because we're in it for the long run, and we got a long way to go. This is a marathon, not a sprint. Keep telling myself, but after these days of getting slammed, you want to kind of diversify a little bit. So check out all my videos about the stock market. I'll leave the link of the playlist down below, like I said before. Definitely, if you want to get the SPHD, hit the link in the description below for Robinhood. You get free stock. I get free stock. Use that affiliate link down there. Also, another way to diversify the portfolio is do other things, such as maybe do some gold or some a high interest account, a high yield interest account products, and I've got videos about that as well, so make sure you take a look. And give me a like, comment, subscribe, tell me what you think. You like this ETF, you don't like it, and reasons why. Always up for a good discussion, help out the community. And thanks so much for watching, really appreciate it, guys. And if you're really into diversifying, I'll leave some links about the crypto stuff as well. That's definitely an option. And definitely share this video with someone who is looking for low volatility, high dividend. All right. Thanks a lot, guys. Keep hustling, and I wish you much success in your finances and in life. Peace.